Hi guys, welcome back. Today you'll be getting a quick breakdown of 5 funds that pay you high dividend income just in case you're looking to build yourself passive income from investments. Now, if you have $100,000 in terms of investment pot and if you allocate to these 5 funds, any of them, you realize you will be able to derive for yourself $400 to $500 worth of passive income per month. That's quite good, correct? So if this video interests you, continue watching on. Not only do these funds pay on a monthly basis, they are well rated across its peers, and it's something I took into serious consideration when I was creating these 5 for you. And I also factored in the Morningstar rating. Morningstar, if you haven't realized, is actually a rating that's given to each and every fund for its risk-adjusted return. And there's a scale for it which I'll quickly pull up for you to see. In this scale, average funds rated by them are given a 3 stars. Those that are above average are given 4 stars. And those in the top 10%, in their opinion, are given 5 stars. And today, there's somebody who actually earned 5 stars from them. To make it easy for our discussion today, we will actually start with bond funds and eventually end off with equity funds. And today, the first bond fund idea I have for you is the United Asian High Yield Bond Fund. You know, Asian High Yield has been doing quite badly over the last few years, but nonetheless, maybe it's of a good value right now. Maybe it has potential moving forward. And United Asian High Yield Bond actually scored a 4-star rating from Morningstar, which means it's done better than most of its peers in his opinion. The United Asian High Yield Bond actually invests 65% into Chinese bonds, which means you have to have a certain conviction, a certain comfort when it comes to investing in Chinese companies. In addition to that, what I've realized when I studied the fund is actually they are investing into bonds that are shorter duration, which means they are less affected by interest rate news. So this is a serious consideration whether this strategy fits you. The second fund I have to suggest for you is the Emerging Market Neuberger Berman Hard Currency Bond Fund. Emerging market means Mexico, Brazil, Russia. These countries are emerging markets. And what does it mean by hard currency? It is actually the exact opposite of local currency. So imagine this, if the Mexico government is issuing bonds, this fund actually buys for you the Mexico government's bond in US dollar, which means it's not affected by the local currency, the Mexican peso. If the Mexican peso devaluates, there's no risk to it. The main risk is whether Mexico government actually defaults or not. So the focus of this fund is to buy into quasi-government and government bond funds, also known as sovereign. So this fund actually delivers for you about 5% in terms of annualized dividend yield. The third suggestion I have for you is the Eastspring Monthly Income Plan Fund, also known as the Eastspring MIP Fund. This fund has been around for quite a long time, almost 15 years to be exact. And when you look at this track record that it has been delivering 5 cents per unit consistently. Now, that is a good news if you are a dividend investor. And this fund current pricing means that you'll get about 5.5% in terms of dividend yield. Now, when you look at it a bit closer, this fund actually invests in Asian high yield and US high yield, 80% into these 2 sectors in combination. And the remaining 10 to 20% can be invested into equities itself. This means it's a hybrid approach, which means you have some exposure to equity, unlike the first 2 funds mentioned, which are purely bond funds. The fourth suggestion I have for you is the Schroder Asian Income Fund. Now, this fund has been paying about 5% in terms of per annum dividend yields. So when I actually did some investigation, I actually pulled up this quick article from Business Time before, and they mentioned that based on track record, the fund has actually been paying out from capital because the total dividends collected is not as high as this 5%. So take note of this when you invest into a balance or even an equity fund. Some portions are actually sold out from capital itself. Now, if we deep dive into Schroder Asian Income Fund, which is highly popular, the bond portion is actually into Asian High Yield, which is similar to the first fund mentioned, the United Asian High Yield Bond Fund. What about the equity section? The equity section invests into Singapore, Hong Kong and Australian markets mainly. So if you favor these sectors, Schroder Asian Income Fund is actually a good solution. It gives you this balanced approach immediately. The fifth fund that I have for you today is a pure equity fund, just in case you want equities and also dividend income more than 5%. As we understood from Schroder Asian Income, when it comes to equities, dividend yield is never going to be 5 to 6%, which means some parts are paid up from capital. Today, the focus fund is actually the United Global Durable Equity Fund. This fund is a superstar. It's rated 5 stars by Morningstar. And because of its focus, about 50% to US equity, it's appointed a sub-manager, Wellington Management, to oversee the management of this fund, and it's beaten its benchmark consistently. That's why I've pulled up for you to understand this fund actually exists. Something that beats the benchmark, something is equity, actually pays you more than 5% in terms of dividend yield. Now, if you have benefited, smash the like button below so that more people can get exposed to the good investment ideas mentioned. And also, click on the subscribe button below so that you get notified whenever I release a financial video for you, and join our community. It's really growing right now. And again, if you are unsure about any parts of investing, look for a qualified financial advisor. Don't buy investments without doing research, and don't buy investments if it's not fitting your investment approach. And as usual, if you have comments, leave them below. I'll look at each and every one of them. With that, I'll sign off. Take care and goodbye.